everybody, this is Gausepohl with Summit Lending, and just a real quick thing on cash out refinances. So Fannie and Freddie, who purchases most of the loans that mortgage companies do, just said that they are not going to purchase cash out refinances if there is a first payment default. So what does that mean? So that means mortgage companies are in high risk. So they're going to have to either, some companies are not doing them at all, and some people are putting added risk layers. So they'll say, okay, hey, we'll do them, but you got to have a 720 FICO, you have to have 12 months reserves, plus we're going to add to the rate to protect our interest. So those are two things. The biggest thing I want to get out of this is if you have equity right now, which, let me read these numbers real quick. I guess there's 128 million households, okay? 64% of those are owned, which means about 82 million. 36% are rented. So, okay, so out of the 82 million that are owned, 40% are owned free and clear, which amazes me, okay? So out of that 82 million too, let's say 50 million of those people have a loan to value, which means their loan to the value of their home is 53% loan to value, which is huge. So 53%, let's say 50%. So you owe 150,000, it's worth 300,000, so it's almost double. So you got all that equity. So that equity is there. My point to all my cash out refinance, if you have debt, which studies just came out that $15,000 in credit card is average for the average American citizen, okay? It's actually $23,000 for homeowners, because homeowners usually can have higher credit limits. They get more chances of getting their credit up. So $23,000 are credit card bills. So if you have equity in your home and you can pay off credit card debt, it is, you have to do it. Even though they raised it a little bit, the rates are still smoking good. So if you have debt, get rid of those credit card debts. Get it paid off. I did something for somebody the other day. Again, I made this video before. They had $1,200 in credit card debt a month. Okay, I lowered their rate and ended up saving them $1,500 a month. And again, that person goes, well, you know, I've had this loan for 4 years. Blah blah. I don't want to start over. Okay, well, take that $1,400 that I saved you, put it towards your principal. We ended up doing it and knocking the loan down to 15 years. Okay, so that's huge. It's just, it's a no-brainer. So do it while you have that equity. It's just sitting there in your home. Use it or lose it, because we don't know what the values are going to be after this epidemic's going on. If you have a lot of debt, now take that debt and use it. I mean, pay it off, but don't get in debt again. Don't take that money out, go to Vegas, put it on red. Don't buy that sports car. I'm just telling you, take that debt, use it wisely if you can, and pay off debt. Okay, so anyway, whenever you have a situation like that, let me go through the numbers with you. We'll crunch them together. It makes sense to do this, and we'll go through it. So again, my name is Gausepohl with Summit Lending. Have a great day.